Hello and welcome to Pro Trader Strategies Market Commentary for January the 5th, 2016. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having said that, let's get this on. Not a whole lot of economic data coming out today here across the pond. German unemployment numbers did come in at negative 14,000 versus negative 7,000, so that seems to be a little bit better. Great Britain construction PMI a little bit better than expected. CPI numbers across the pond were lower than expected, so inflation not really an issue there. Here in the United States, we really don't have anything except for some vehicle sales going on. That being said, the overall market is still down. S&P, E-mini S&P chart here, as you can see, is below 2,000, which is a psychological barrier. The real resistance area, as you can see, is going to be this 209 area. But we're off by about 11 points right now in the E-mini S&P. This is the chart that I wanted to show you guys yesterday of the E-mini S&P. This is a daily chart with the volume profile. This volume profile kind of squishes all of those daily profiles together and creates one consolidated one. As you can see, the E-mini S&Ps yesterday came and tested this value area low, which is what I was talking about, and that is going to be a line in the sand for the bulls and the bears. Get much below that, then the bears are winning. So it looks like we could easily go back down and test this retracement area, or this 50% Fibonacci level. Anyway, Nasdaq, again, off about 41 points after that big rally yesterday of easily 40 some odd points, but came and tested the value area that I talked about. This is the point of control, and you get much below this, the bears are winning, and you get much below this at all, then the bears are really got the longs running to cover. So that's the E-mini Nasdaq. A couple of trades that I've done. This one I did yesterday, actually, towards the end of the day, and it was in Nike. I needed to do something, get something to hedge against my Lululemon that I'm getting kind of crushed on. So I looked at Nike to kind of hedge off some of that risk, and it's been selling off as Lulu's been rallying. So I thought it might be a good time to put some longs in this to kind of counter hedge that Lulu. Anyway, so in Nike, I did the February. I bought the 57.5 calls and sold the 65 calls. Now, why did I do that? It kind of goes back to the webinar that we did on last week on Wednesday. And the reason why I did that is because there's such low implied volatility percent in this Nike. As you can see, it's down around 12%. It's, the current is at 26, but the implied volatility percent is around 12. So that means that I can't really sell option strategies against it. So I opted to do the long call with that. And I got it for basically the intrinsic value of those 57.5 calls. I did that and paid out $4.03 for that. So if you added that in, that put me right there at the $61.50. So that's where it was trading right when I was doing that. It's up a little bit today though. So that was a trade that I put on yesterday. Going on to today, GoPro back at it again. So I took that off in January yesterday. If you watch the daily market commentary, I took that off yesterday in the January contract, went back into it in the February and did the 15-28 strangle, and that's the 15 puts and the 28 calls. Now, unfortunately, in that market commentary, I misspoke and said that I did the 25 puts. where those were calls. So that strangle I did yesterday that I took off was the 15-25 strangle, the 15 calls and the 15 puts and the 25 calls. Today I did the February 15 puts, 28 calls, and combined those for the strangle and collected $1.13. Sorry if that may have been a little confusing, but anyway, moving on to the diamonds, I need to add some short deltas to my overall portfolio. And if you guys have heard me talk about this, or maybe you're new, I am long deltas, which means I'm long the overall market, but I'm bearish the overall market. And the reason why I've gotten long the overall market, because I've covered a lot of short call spreads in the past few days on the sell-off. So I needed to add some more to that to get a little bit more delta neutral, because I don't want to be long deltas in here. So I went to the diamonds, which is the ETF for the Dow Jones Industrial Average, DIA is the call there, and or the ticker symbol, and went into the February 175, 176 call spread and sold it for 37 cents. And why did I sell the 175s? Because it's just above this 200 moving average, and also if you look at the Dow Jones, the 17,500 area is a big resistance area. So I decided to go ahead and do those strikes with that. Plus it fits right in with the width of my strikes and everything else. So everything kind of came together on that. The next trade that I put on today was in Whole Foods. And again, I needed to get some short deltas in my portfolio, and it was up a little bit this morning, but I think the overall market is looking to take a turn. As you can see, the MACD lines just crossed there, so it's looking like it could be a little bit bearish sentiment coming into that, hoping that it comes off. So I did the February 35, 36 call spread, and as you can see, I sold those 35 calls because I could get tested on those, but that's been a pretty good resistance area, so I sold those 35 calls. And if it goes much above the 36, I want to kind of be out of that trade. All right, moving on to ADM, adding some more short deltas. ADM has been in a free fall. It doesn't look like there's a whole lot changing. It looks like the MACD is getting ready to cross. We have high implied volatility percent in here. So I was looking at ADM for a short as well. And I did the February 37, 38 call spread and collected 32 cents for that trade. Again, all of these have the same mantra where I'm trying to get as many short deltas added back into my account as possible because I am too long. XOP. XOP is the spider S&P oil and gas exploration and production. And if we're having all of this go on over in Saudi Arabia with the breakdown and talks, that really could start sending a lot of oil out there on the market, and oil could go much lower. If it goes much lower, it's going to really hurt these oil exploration guys. So this is a conglomerate of all of those guys added in there. So I don't see it doing very well over the short term anyway. It also has high implied volatility percent, and I again needed to add some short deltas to my overall portfolio, and XOP fit that bill. It also gets me some oil and gas exposure. So I did the February 32, 33 call spread in there and collected 30 cents. So I got the third the width of my strike on most of those, and I'm looking to take 50% of my max profit out of those if we get much more of a sell-off. So that's all I got for you guys today. Check out Friday's webinar. It is going to be on long put spreads, which is in a market where we're going down, that's going to be a really good one. Find some markets that have low implied volatility and try and take advantage of that. These ones that I did today, I was trying to take advantage of the high implied volatility, other than the Nike. All right, that's all I got for you today. You can check out ProTraderStrategies.com, get that Friday webinar sent to you, and check out the rest of them. We've done them on iron condors and everything else. And earnings season is coming up, so you might want to get that one sent to you, because we've got like Bed Bath & Beyond coming up, KB Homes this week. So if you haven't seen that earnings trade webinar, go to ProTraderStrategies.com and check that out. All right, that's all I got for you guys today. And if you can't take that, take it easy.